Sound should be good. The chart should be good. Okay, good. Excellent. Wonderful. Romano, I read your thing about, thanks for that, bud. Glad it's working out. You can always send me an email anytime, too. Actually, let me put that in here. I always do this at the end, but... Here's my email address, Seiden@tradingacademy.com. I know sometimes, people have questions that they're just not comfortable asking or sharing in a public chat like this, which is totally fine. Just, you can always shoot me an email, Seiden@tradingacademy.com. Francisco is saying no sound. Does everyone else have sound? Okay. Hopefully they'll figure it out, and we'll get started. So what we're going to focus on today is looking at the proper entry and stop placement. We can also look at targets for short-term trading. Okay, we'll primarily look at FX markets, but I'll kind of show you what I do here as well. All right. One thing that do on a very, very regular basis for I'll just tell you for that there's two things, right? The short-term trading for income and that long-term trading for wealth. So on the long-term side, it's mainly very simple options positions around larger time frame levels, right? On the short-term side of things, it's short-term trading around small time frame levels. Now, for new people, when we say levels, what we're specifically talking about are price levels where the chart is telling us, based on our rules, that there are lots of unfilled buy or sell orders at a specific price. Okay. Yeah, so Lee, good question there. Lee is saying, what do you mean by short-term trading? Is it intraday trading? Yeah, and I would say that the type of trading that I'm talking about today is very short-term. Minutes, right? Seconds to minutes. If you're, for example, if you're looking to make, I don't know, $300 to $1,000 a day, and you can identify, levels on small time frames. Yeah, Mike, maybe scalping, but I think, Mike, to be honest, for example, if I said scalping, I don't know that you would know exactly what I meant by scalping. When you say scalping, I don't know exactly what your definition is. It's not you and I. I just think when we say scalping, we all need to define it, because there's no standard terminology. So I want to be very, very clear. Okay. Maurice, larger time frame trend, I would say don't even need to consider it. It's irrelevant information when we're talking about this. Let me show you today, for example. This is a trade that I took. Some of you may have taken this trade in the S&P. Okay, so coming into the day, you should be able to see the chart. The market was just, overnight, just in the U.S., just trading, not a whole lot going on. So above current, what we want to do is come into every day and find where the significant unfilled sell orders are above current price and significant unfilled buy orders are below current price. Okay, now we said we want to know where institutions are buying and selling, and absolutely that's what we're looking to do. But when we say that, again, when we define our levels, right, with the odds enhancers, okay, you don't need to be in the business too long to realize who has all the money, who has account sizes that can cause significant moves in markets. It's not your average retail trader. So if I scroll back just a couple of days or so, now you'll see volume at the bottom of the chart in the S&P. I don't care about volume. It just helps me see where the day session is versus the overnight session very quickly. So coming into today, above the overnight Globex high, we had a level right here and another level sitting on top of this. Okay. When we look at the odds enhancers, now our strongest levels are going to be our rally-based drop and drop-based rally. So these are not that. These are the drop-based drop, which are okay as long as they're on the right side of the curve, and that goes for any market. And again, when we define curve, I'm not talking at all about trend. Very little trading here on a small time frame. Strong move away from that level. No retracements. Those are three key odds enhancers. There's more. Price moved really far away from this level before returning back to the level. This morning was the first time we came back up into that level. All right? And we're about to hit it again. So, yeah, Nico, I would not go above a 10-minute chart. And if you find a level on a 10-minute chart, for example, take that trade off like a 2 or 5-minute chart. Now, all I'm looking to do here is I'm sticking with fresh levels. Okay. If you're sticking with fresh levels and you've got the odds enhancers really down, which means you're picking good, good levels, which a lot of you are pretty good at the levels, you're going to see that if you look at the profit loss, you're going to see a lot of these are, or risk reward, I should say, you're going to see a lot of these are maybe 1 to 1 or 1.5 to 1 or 2 to 1, but you're not going to see many, if any, that are 3 to 1. The chart may give you that, and price may move to that. I'm saying if you look at like a trade, the trade I took this morning, that was not 3 to 1. Okay, it wasn't even 2 to 1. And because I know that the odds of prices bouncing off these levels is so high that I'm going to be, if I'm doing this right, if I'm getting the levels down, I'm going to be right, far more than I'm wrong. So I don't need to go for that 3 to 1. I don't need to play, that side of the game. It's great, but you don't need it. Okay. So you're again, if you and where my mind goes is if you think about, I started in the floor trader world. All a floor trader who's trading their own account is looking to do is see where the big traders are trading, the big banks and institutions are buying and selling, which they can do. That's really what you're paying for when you have a seat at the exchange, right? You can see who's buying and selling, where they're buying and selling at. Once you figure that out, that's where you're going to buy and sell. That is exactly what I'm talking about here. Nothing more, nothing less at all. Okay. Alexander, yeah, be nice to go for. Make sure the chart. So the first rule I want to really give you is make sure the chart is offering you at least 2 to 1. Okay. And then I would take 1.5 to 1, or make sure the chart is offering you 3 to 1, and then take your profit at 2 to 1. Okay. You really want to set this up so the odds are really stacked in your favor. Okay. Actually, yeah. So this is the S&P. I'm not in love with the S&P, to be honest with you. I like doing this in DAX or Russell or stuff. BOB. Why price always back to the level? Sure. So this level represents significant supply, right? But BOB or Walker, whatever you want me to call you, sorry about that. Whoever was selling here, did they fill all the orders they had to fill? Did they sell all the orders they had to sell? No. We know that because price didn't stay there and fell away, right? Okay. So what an institution or a bank spends a lot of time doing is, that's how they make their money, is a lot of their money they make is by getting those orders filled. Okay. So price, they're going to do what they can do to get price back to that level. And again, the whole bandwagon gets underway once price starts turning higher anyway. As soon as people see higher highs and higher lows, they start buying. Once this starts to happen, okay, or a breakout above a Globex high, that's a buy signal for a lot of people, which obviously was a clear trap today. In the XLT, today's a perfect trading day for them because it's a nice bull trap. Anybody take this trade, by the way, this morning? I'm sure I wasn't the only one. Anyway, Tej, you took it. Okay. FT, I'm not suggesting an institution's going for a small profit target at all. Okay. I'm just saying that's where the orders are. Okay. Yeah, so John, you're absolutely right, but remember, this is overnight trading. Not a whole lot going on here. Not to mention, look at all the time price spent here. That does not worry us at all. Okay. I'm not expecting any of this to stop prices from falling. Okay. Just right at the level with a stop 2 ticks above the level. Okay. So let's move on. And so that's the futures, and you could trade the equity index futures, the treasury futures, the Forex futures, commodities, energies and metals, all that. Great. Futures are great. I love the futures. But if we move over, if we're not going to trade the FX futures and we're going to trade the spot market, we've got to make a little adjustment. Yeah, Nico, absolutely. So Nico's asking, for the short-term trader, will there be a setup for supply and demand every day? Absolutely. Yes. Okay. So let's go to another market. I can go to any market you want. Let's go to a spot market. I'm assuming people are going to want the euro. If you want something else, that's fine too. Okay. You want the yen? Yeah, no problem. Let me go to the yen. Okay. As soon as the chart comes up, this black chart takes a little bit longer to load, so sorry for the short delay. Tick charts are great. Yeah, Shawkat, 15-minute trading for the trend is fine, but again, doing this, I don't. Trend really doesn't matter. Fresh levels. Let me put it this way: what trumps everything is fresh levels. Okay, fresh levels, fresh levels. Yeah. So, Connie, what you're looking at, the roadmap for price, the most likely move in price in the future is from fresh level to fresh level. Right? Price is more likely to go through levels that are not fresh because there's less orders to stop price from moving. So, your true profit zone is from fresh level to fresh level. So if that's, let's say, 20 pips, okay, I would always take profits at 15, right? Or if you want your batting average to be even higher, take it at 10. You see what I'm saying? Nico, for short term, yeah, I think all you're doing, think of the trading floor. Go back to the trading floor for a minute. No one's even remotely thinking about trend. What they're focused on is, here's where, Barclays is buying the yen all day long, and they just keep buying here and buying here. When I look at the filling broker who's filling those orders, that stack of paper at that price level is so thick, that's where the floor is for the yen until Barclays pulls those orders or someone else pulls those orders. That's what they're going to be focused on. And here's where the nearest area of sell orders is. No one's going to even remotely be thinking of trend. You follow me? So again, same thing here. Yeah, Chuck, exactly. Fresh level to fresh level. Okay. Yeah, so let's go to the 5-minute yen. Okay. So let's see here what we've got below. Actually, I'm going to do the same thing we just did in the S&P. Let me put a line up here and scroll right. Let's see if we have anything above the high. We'll probably find something. Let me blow this chart up a little bit. Okay. Let's take a look. So I'm going to move. So you have all these highs here, which I'm not interested in. So I'm going to move this up and up. Okay. And so we've got two areas that we're going to take a look at. Okay. We've got this area right here, and then we've got this one right here, which is exactly the same looking level as the S&P. Okay. Let's put some. I keep hearing this buzzing. Give me just a second. I'm going to replug my headphones in onto another port because it's hard to. Give me just a second. Okay, I think it should pick it up. Is sound good? All right, great. Yeah, so let's look at both these levels, specifically this one. So here in the yen, we're talking 99.75 to call it 99.83. Okay, so I'm going to add 83. So that's 8. Wait, is that right? Is that 75? Yeah, so it's 8 ticks. So just as a rule, I'm going to use 4 ticks as 4 pips for the stop. Okay, so I'm going to go half the level there. Okay, so right here. Whoops, sorry about that. Okay, so right there. All right. Now here's the here's the potential trade, right? Looks far from current price, but this is a 5-minute chart. So what we would be doing is entering at the bottom line with a stop up here at the red line. Now that may look like a big stop, but here's the problem. We have to adjust for, just think of the reality of what's happening here. When you sell short here, you're forcing someone to buy, right? So if your broker's going through a bank or whoever they're going through, a bank or someone like that is on the other side of your trade. Well, the bank or institution, market maker, whatever, they want to sell here. They already have sell orders there. So you're selling here, which means you're doing what they do. So you're forcing them to buy. Okay? If you're the broker, or if you're the bank, and someone forces you to, your intention was to sell here, now someone forces you to buy here, what are you going to do? What are you going to have to do? In fact, today, you don't even have to do it because it's already programmed. The retail trader sells here, right? The bank buys. What happens to the spread when you try to sell here at this bottom black line? What happens to the spread versus selling anywhere below that? It widens. Yeah, of course it gets wide. And it's not even like someone's manually doing that. It's a computer program. Now, why does it get wide? And no one's why does it get wide? Because right now, first of all, let me say something else. If it gets wide, is that a good sign or a bad sign for the level? Because to the average person, when the spread gets wide, they don't want to trade. But it's really a good sign. It's an odds enhancer for spot Forex that is exclusive to spot Forex. Okay. So just understand that. So because of that, we've got to put the stop out here a little bit. How many times have you seen price, our levels, go just maybe a tick through the level, stop out, and then it goes right in your direction? My guess is that's happened quite a few times if you're kind of new to this. Okay. And if you said, man, if I just adjusted a little bit more for that stop, I'd have so many winning trades. Yeah, see, and look at the response. Yeah, a lot of the times that happens, right? So you have to adjust for that. It's like those reality shows, right? Or not the reality shows, the America's Got Talent or The Voice. I just got cut off. I just got kicked off. All right. So, yeah, so you just, again, keep it simple. Think like a bank, trade like a bank, right? So you have to make that slight adjustment. Yeah, freedom. I don't think there's anybody out there stop hunting. It's all computer programs today. Okay, it's all, again, every time a bank is going to do a transaction, they've got to build in their profit. So if you're forcing them to buy here, the spread's naturally going to get wider because, right? Because they want to be selling here, they don't want to be buying. Right? So Again, I just went, if the level's 8 ticks, I just went 4 ticks on the stop, and that's usually fine. There you go, Nico. That's way beyond what I'm capable of doing. But okay. I'm just reading back here a little bit. Yeah, so George, again, as a general rule, I'll just, whatever the size of the level is, I'll go half that on the stop. But here's the thing, if I did this in the futures, I'm usually okay just putting the stop just a minimum price point above the level. In the spot market, widen it up a little bit. So there's a trade-off there. It's not that the spot market is like really bad and don't trade it, it's just you've got to make that adjustment. The positive side is, you can trade spot Forex with a lot less money than you can any other market. Okay. So there you go on that one. And I would keep that level in and watch that one. All right. The next level above is going to be this guy right here. But we would just handle it the same way. So there's one other thing I wanted to tell you about this. I can't remember. Anyway. So there's that level above there. Let me go down a time frame, see if we have anything here. Okay. Now, also too, I think these webinars are great, and the whole, how we've just got, look at Online Trading Academy. We've got the trading rooms, and I think it's great. But the problem is, you've got to be aware of the fact that this is competition at its finest. Okay, meaning if this new little level that's kind of forming above, if we map this level out right here, and everybody in our group sells short here, there's two problems with that. Number one, there's only a certain amount for sale up here. Let me put it this way: there's only going to be a certain amount of willing buyers, and we already know there's more sellers than buyers up here. So we already know that. Okay. So if everybody sells up here, there's two problems. Number one, not everybody's going to get filled. Number two, if too many people try to sell here, you're forcing the bank to buy a lot. So the spread's just going to get wider and wider and wider. So the key is to learn this and, believe it or not, try not to actually do it as a group, if that makes any sense. And I'm just being brutally honest with you here. Okay? All right. And it's not like, again, it's tricky. This is competition, kind of zero-sum game, right? Yet we're all trying to learn it and do it the same way. So you've got to balance that. That's the reality of this. Will, I like to just have one target. Okay. All right. So think like a bank, trade like a bank. So let's do this one again. So call this 98.98 on the entry. 98.02 is the top line. So there's 4 pips there. So let's put the stop at 04. All right here. I believe that's 04. I'll check it in a second. That's a little bit more than 04, so let's put it right down here. There you go. All right. Now, if you take a look at this, we've got some fresh supply above, and we've got some used up demand below. So this is an ideal setup. All right. Well, there's another one just above it. Typically, as a rule, I'll go with the upper one, not the lower one, when you've got 2 to choose from like this. Okay. All right. So watch that one. All right. And we've got to adjust the stop for the force. So we're not talking about targets too much. Yeah, the upper part's a bit crowded. I agree. Okay. And, something like this, I would be fine taking this for 1-to-1 because the odds of these working when you get it right, you've got to get the levels right, your winning percentage is going to be high. I'm just looking for, a few bounces. Okay. FX, there's not much floor trading that goes on anymore, number one. Number two, no, most people, even back in the day when floor trading was huge, most people did not use charts because they had the orders. You'd hardly see anybody looking at a chart. Okay, so there's a couple trades set up there. Anyone want to look at a different market? I'm totally fine with that. George, good question there, but I'm not reinventing the wheel at all. There's nothing I'm going over that's not, this is how markets have always worked. This is not like a new way. I think what's different is retail, your average retail trader or investor has not looked at things this way or not thought this way. But, this is what you work or trade at a bank or institution, 10 years ago, 20 years ago, whatever, this is all they're doing. Right? You look at Walmart or any big retailer around the world, this is all they're doing. Right? Buying at wholesale, selling at retail. The key is identifying wholesale and retail. Okay, so someone want to look at Aussie Yen. Let's take a look. My chart will catch up here. Sorry for the little delay. There we go. Okay. So I would say on, let's see, this one, we've already kind of, this area right here, I would say we've already kind of used it. These are the best. When you've got this coming out of the rally-based drop, right, I'm going to put these lines in. I wouldn't take it again because you see how prices, right? So again, you're on a trading floor and when you see this drop, you see an institution or a bank just selling at this price, and then you run out of buyers and price drops. Every time price comes up here, anyone trading their own account is just going to lean against this level and sell, make money, sell, make money. It's very short-term stuff. You may not be interested in this at all. That's totally fine. We're just mixing up the webinars and going over this. Yeah, Jake. Yeah, return is important, and the most important thing is fresh. Connie, rally-based drop, drop-based rally, fantastic. Make sure they're fresh. And there you go. So yeah, so I wouldn't lean against this one again. Prices are very likely to fall from here, but I'm big on just taking the easy money the first time back, or the very predictable quick profit the first time back. So now let me ask you this, or I don't need to ask you. Let's just point it out. Where's the demand level below? Okay. And I would say we probably have a couple levels down here. This would not be a level. I think it's more important to show you levels that would not be considered. This would not be considered. It may stand out to you, but why we would not consider it is it's already a pullback into that. All right? This spike to the upside is fine, Nico, but the fact that this, look at how low price went. This low is near like at the bottom of this. So I would not expect, when prices come down here, I would not expect this to hold up. But we do have some fresh levels below. Okay. Actually, let me take this down to a smaller time frame here. Okay. There's the two. To get to the really fresh stuff, you're really talking about down here, these two levels. This drop-based rally should be okay right here for a bounce. You just have to see how prices get there. Okay, I'm going to put this in. How we draw the lines, too, I haven't spent any time on that because, you know, I think we've done that plenty of times in the webinars. But that's key. You have to follow the rules there. So, again, if this level is, let's see, 93.27 to, call it 21. So 6, so we go 3. Take the stop down to right here. 3 ticks below the level. Yeah, I would not worry about the color of the candles, Nico. In fact, if you you might get you might be well served to take all the colors out of your candles. I mean, you probably do better if you just have black candles on a white background or white candles on a black background. All right. Boyke, not sure what you mean by that. Anyway, let's see. I'm just reading back. Yeah, so taking out a prior high or low is great when it's right into a level. That's exactly what happened with the S&P today. Okay. Scalpers get scalped. No, I have not heard that. Not sure. Not sure exactly. Scalpers get scalped. I can kind of read between the lines. Yeah, I think. If you go to a proprietary trading firm, I've seen a few of them, and, they're all just battling against each other, Kickbacks, if you're talking to me, I get no kickbacks from anybody. I'll take some if somebody has any to offer. No, I'm just kidding, but no, I get no kickbacks from anybody for anything. No, I know you're joking. So, see this little level here? That may look good, but we've already been there. Make sure it's fresh. I've probably said that 10 times during this webinar, but again, it's so critical that the level is fresh. Okay, but honestly, if you look at what happened here, this is very similar to the S&P today, only the S&P hit this level and fell way down. But I probably, trade from this morning was one, for me it was barely 1-to-1. But again, I've been doing this for a long time, so I'm just looking to make a little money off a couple of these a day and keeping it high odds, getting in on that first pullback. Now, where price is at now, it could fall, it could go higher, but this first pullback, the odds are incredibly strong that you're going to fall before turning higher. This second pullback, it's probably more, it's not, you're not so sure anymore. The odds are not as strong. Okay. All right. Yeah, and if someone's kind of new to this and you haven't been through kind of the core supply-demand strategy lessons and things like that, a lot of this is not going to be making sense to you. So I encourage you to go back and watch some of the other webinars, and we'll go back to the basics at some point. I would. The way I do it, I wouldn't take this level again. Even if it works out great, I still wouldn't take it. It's totally fine. I mean, it's very low risk. Your stop would be, whatever this is, go half the distance above. We can go to another market. I think repetition is pretty good. Why don't we go to a non-Forex market? Let's see. Something like, how about gold? I'll take a look at gold. That's a little risky, though. I don't want to be responsible for. The last thing we need is someone brand new that's never traded gold start trading gold. Let's go back to the S&P. All right. So that level looks like it worked again. So the drop-based drop produced a rally-based drop right here. So when I go back, let's crunch this up a little. So this drop-based drop that we identified this morning, again, I took the trade here. made a little money, but that produced a rally-based drop. But as you can see, because the move away was so strong, very little time at the level, that produced another little bounce off that area. But all we're witnessing in real time is banks and institutions have a lot of orders to sell between 47, and I'll actually take that all the way up to 52. I'm not saying make that all one level, but that's where those orders are this morning. And until those orders are all filled, we're going to keep falling off that level. It's a very different mentality than what's the trend and what's the news and all that. Okay. Yeah, up in here. Forex scale. Okay. Globex doesn't affect trading at all, John. First of all, just so everybody knows, when you say Globex, when anybody says Globex, it's a little, the terminology is a little goofy, because what Globex is a system. It's like how the NASDAQ is an electronic order matching system. That's what Globex is. And so a lot of times when people say Globex, they're referring to the overnight session in the U.S., but that's not really it at all. Even if you're trading, if I'm trading the S&P right now during the day session, you're still trading on the Globex system. Does that make sense? So just so everybody is on the same page with that. But again, the fact that the Globex high was right here and we had a supply level sitting just above, that sets up the perfect bull trap. Okay. Yeah, CLS. Yeah, we can look at gold. I love gold. I'm sure you'd agree, though, that trading COMEX gold. This is $100 a point. Very low volume compared to the S&P. All right, so just be careful. All right, let's start with a little bit bigger time frame than this, and we'll work our way down. I'll stick with this chart though. There's the 5 minute. Blow it up a touch. I'll scroll back and let's look for something fresh above 1348. Okay. Here's our level. The first one anyway. There's more, but here's the first one on this time frame that we're going to look at. For those that are in the mastermind community, where we give you the levels every day, this is, I believe, the level that's on there. Okay. All right, so that comes in 95 and change, well, 95.50 up to 97.50. So that's 2 points. So I'd go with the stop, half that up here. And as always, I haven't said this, but I probably should have said it a bunch of times, make sure you always adjust your position size so that you're not risking more than you're willing to lose. So we go, let's see. Well, so the stop is right here at 99.50. Okay. Yeah, I'm glad you asked that. Things like very liquid markets like S&P, NASDAQ, things like that, euro in the futures, but gold is not anywhere near the liquidity of the S&P. So I'll apply the same logic as we would in spot Forex. Okay. Yeah, Ian, that's going to be a function of how good you are at the level. So Ian, someone like you, just shoot me an email and put a couple charts in there, and I'll quickly be able to look at that and say, he's got it, or he's missing this key information and doesn't get it. Okay. Nico, I will tell you, I would say from 7 to 9 a.m. Central Time, 8 to 10 Eastern Time is a great time to do this. As long as you're looking at a few markets, I don't think you're ever going to have a time where there's nothing to do, or you don't have something, jumping up right around the corner, if that makes sense. Okay, so watch gold at that level. And again, we're just focused on little time frame levels, and you're just Think like the banking institution, trade like the banking institution. That's the whole point and goal of today. Let's go over to... Yeah, so Alexander, good point. The wicks on the downside are fine because it's a supply level. What you don't want to see, what would cancel out the... what would cancel that level out or disqualify that level with the odds enhancers is if those wicks were on the upside. Okay? Because what we want evidence, because if they were on the upside, that would tell us that there really is no supply in the level. Because if there was, how would price be able to go above that level? If that makes sense. I kind of give you the short version there, but hopefully you got it. Pan, you're always waiting for the retest. You don't know it's a level until price moves away from the level. We're never taking the breakout. When the breakout happens, that gives us all the information we need to make the right decision on that level. Okay. SD, that's probably one of my favorite topics, but a much bigger topic than we're about out of time here, so that's way bigger than we have time for here. But yeah, I'm a big fan of options. POP, I'm not sure exactly what you mean by that one. And since we're out of time, let me, there's my email address again. And I'm pretty caught up with emails again, so Seiden@tradingacademy.com. There are, no, keep it very mechanical, Connie. Very, very mechanical. Nick, yes, less than 5 minute charts, absolutely. 2 minutes, tick charts, all that stuff. So, yeah, hopefully that was helpful. And, you know, if you have any feedback or, you know, if you're trading really well, struggling, you know, you can always send an email. Send the good, send the bad, questions, whatever, we can we'll try to get there. Oh, one more thing. Anybody here live in Australia? I almost forgot. Anybody here live in Australia? Aaron, yeah? All right. Look at the screen. Hang on a second. I'm actually going to be there shortly. Let me try to do this here. Take a look. Can you see the slide? You should be able to see that. So July 25th, 26th, 27th. Just go to www.otaaustralia.com, and that's going to be, there's a lot of, we're doing a kind of a joint thing with FXCM, so that will fill up pretty quickly. You can always pre-register if you want a spot there. It's like a half-day thing, preview, or a market timing class. Again, OTAaustralia.com. All right, have a great day, everybody, and that's in Sydney. I've never been there, so. Yeah, we definitely spent a lot of time in the chat. I don't think I've ever spent this much time looking at the chat, so hopefully that was helpful. And we'll see you next time. Thanks for your time. Have a great day, everybody.